Listen, everybody, we all know that real estate is the most proven way to build wealth. But why isn't everyone wealthy from real estate then? It's hard to know where to start, and most of the education out there is just complete trash, and you end up investing your money on a series of courses instead of in real estate. That's not how this podcast works. We give you the blueprint to successful real estate investing and bring on guests actually willing to share their secrets. I started my real estate investing journey as a freshman in college when I bought my first duplex and have been in the trenches doing deals ever since. And today, I now own hundreds of millions of dollars of investment property. On this podcast, you will learn what you actually need to know to be a successful active or passive real estate investor. And we'll offer our takes on what's happening today so you can navigate this market and build wealth. I'm Drew Brenneman, and this is the Brenneman Blueprint. All right, I want to welcome Adam Sondgeroth to the show today. He's with Sondgeroth Capital. Welcome, Adam.
Hi, Drew. Thanks for having me.
Yeah, I was getting ready for the episode, thinking I was, excited to talk to you, but because I think out of everyone that I've probably ever met at this point, you've bought the most property while still having a W-2 job. So I was interested, talk about that because I think just even in my own mind, I really kind of think there's a sort of two paths. Like you eventually buy enough property as a principal or GP, whatever term you want to use, that you eventually quit your job. And then, the next logical step is you get investors and you just kind of keep going. But, or you go, you know what, that's not the route for me. I will be a passive investor or invest in other people's deals or funds or what have you. But, there really is a third way. You've proven that where you've bought a lot of property while, still holding your W-2. So I think, just want to start there. Why don't maybe kind of how you got started to what do you do for your W-2? Give a little color on that.
I work for one of the big railroads. I inspect bridges. So that's what I do during the day. I inspect railroad bridges. That's my W-2. And I've always been interested in real estate. As a lot of us play Monopoly when we're kids or whatever, we think that's kind of cool or whatever. And some follow that path, some don't. So I started, I don't know, I got a place with my brother back when I was 20. And I ended up selling my half to him and bought another house of my own to live in. And then I got interested in investing, after reading Rich Dad, Poor Dad. Like I think most everybody, that has read that was interested. I was already interested, but it kind of helped spur it. So, so I just started. I got a house with another investor. They sold it to me like with a lease option. I don't remember even how much I put down. They give me some rehab money, and it was a creative deal. And I got into it. I think I got that in 2001. 01 or 02. So that was the first one I got outside of my own places.
Nice. And so the first one you owner occupied with your brother, sounds like.
Yes.
So that's maybe more like a bank loan or one of those ones they sell off to Fannie. And then how did you do the lease option? Do you recall how that was set up? Because that's at that point you don't own it yet. You're doing renovation on a property you don't. So that I don't think has ever come up in the podcast. So maybe you could tell us as much as possible on that.
Yeah. So essentially, you sign a lease with it just like you would any other place you're going to rent, and you have a side agreement with an option to purchase at a set price. And you put money down. I don't even remember. It's probably like $1,500 or $2,000 down, or I don't know. Maybe it was a little more. For that, to secure that option. And the place needed work. And I was just starting off. I had some money, but this guy is willing to he's like, hey, I'll even throw in some rehab costs, which they added on to the back end to the overall cost, So I could draw that down just kind of like, with apartments, you get rehab cash and you spend the money and then you draw it down, so it worked kind of the same way. So, I mean, it was pretty easy, and I had latitude to do whatever I wanted to, whatever I want to spend on it, So, so I fixed it up, and my plan was to flip it. Well, the market at the time was still pretty slow, and I ended up keeping it as a rental, and I still have it today, actually. So, Um, so yeah,
Nice. Yeah. 20 plus years with that one.
yeah,
I'm sure that's doing well. But then, so initially, while you're still under the initial lease, he's lending you construction dollars.
yeah,
So
yep,
then if you didn't end up buying it, then that's just, you more or less did your share of the work for free. And then that, just
right.
whatever he sort of lent it to himself, that money just stayed with him
Right.
type
Yeah.
of
Yeah.
thing.
I essentially did the work for free. So it doesn't make a whole lot of sense if you do all that work and build up all that equity and then don't follow through with it, So
Yeah.
yeah.
But then that's just tacked on to the price. So if you agreed on like 200 grand and then put another 20 in, once that's done, you're paying 220. That's how that works.
Right. Right. Exactly.
Okay, great.
Exactly. Yep.
And
Yep.
then, yeah, what were you sort of targeting those kind of deals starting out, or what were you looking for? Because I'd imagine that seller, had like a certain profile where they probably had a lot of equity in the property or something was going on.
Yeah. And I don't, they probably bought on auction or had it for a while, or I don't know exactly how they got it. And at that point, I really it didn't matter to me what they had in it for money. It made sense to me. So that's why I went for it. I targeted a few people like that. Sometimes it's difficult, especially when you're starting off. A guy doesn't have the confidence to go up to an investor and say, "Hey, could we do some owner finance or a lease option?" Not until you get to a little bit further down the road in your career with investing that you are confident in your abilities to do that kind of thing. So I'm trying to think of what the next one I bought. I think I had some equity in the house I had, or the house I was living in. So I think I used that. Probably I had some cash and used equity and cash and whatever else and bought. I think I bought 2 duplexes next, and then I bought quite a few stuff until like 2007, 2008. Then I was working so much in my W-2, and I had kids, so I kind of slowed down after that. So
And then I think too, it'd be helpful for people where, if you tell us where you live too, and maybe like the rough prices of these things so people can get a kind of a flavor for what's going on.
so I'm in North Central Illinois. I'm roughly 2.5 or 2 hours, I guess, hour and a half to 2 hours southwest of Chicago. So I think I bought that house. I think the purchase price on that first house I got was like 42,000, and the 2 duplexes I bought were like 80 each. So yeah, our prices out here aren't as high as they are in the city, So yeah.
Yeah. In today's times, I mean, what do you think those things are worth? Just kind of because I think those early deals that was 20 years ago. So
Yeah. I mean, the appreciation out here also isn't the best, but the 2 duplexes I got they're probably close to 200, worth 200 now.
okay, nice.
Maybe 220. And that first house is probably 130-ish, something like that, 150 maybe. I don't know.
And then when you said the two duplexes were 80,000, that's for both or for each back then, or
For each. So
okay.
my mortgage was like for both of them was like 160 or something along those lines. So yeah. Yeah. But the cash flowed really well, so
Yeah, and how were you balancing then that, so you work your W-2, was that a job where like you were out of the office a lot? I mean, I think you'd have to be if you're
yeah.
looking at bridges, then you can swing by a property on the way, or how did you manage all that?
So at that point in time, I don't even remember what my job was at that time, but I was working a 40-hour week, maybe more, some overtime sometimes. So like I said, up until like 2007, just before like the market crash, I was buying fairly heavily. I think up till then I had 12 or 13 units between some duplexes and a couple houses, and um, I bought another duplex on auction. But I would work on stuff on the weekends and do showings. I self manage everything. I do showings at night, on the weekends at night, just kind of do whatever I had to do. That's one of the things. If you get into this and you still have a W-2, you have to kind of want it. You know what I mean? Like, what do you got to figure out what you want. I mean, do you want to be successful, or do you want to better yourself, or you just want to sit at home and watch TV? You know what I mean?
Yeah. So yeah, then you're watching much any sports then at this point on the nights or
No,
weekends, or you had to give all that
not
up?
really. I pretty
Yeah.
much give it all up. So yeah, I catch a game on the radio, while I'm changing out a kitchen faucet or whatever else, But yeah, not
Yeah.
not a whole lot of downtime.
Yeah, I have a buddy who did a similar thing and then he eventually went full time with it. But when he
Yeah,
was in that same mode, he was like, yeah, I basically gave up college sports, professional sports, watching him, like I haven't seen anything in like he was like in like
Right.
10 years.
Right.
I'd say I
Yeah.
haven't
Yep.
you gave all that up. People want to see the buildings too on Saturday mornings anyways. So you're
Yeah.
not watching
Yeah.
a lot
You
of
do.
college football.
Right. Right. Yeah. So yeah, everybody works during the week, so they want to try to make appointments
Yeah.
on the weekends, to see stuff. So, and there was really no Facebook or anything, no internet back then, so we had to do, newspaper advertisements and people calling you on the phone. It was a whole different thing back then. So,
Yeah, no, I remember that. I remember actually probably the most worried I had ever been in real estate was my first deal. I thought I could get a certain amount for this 3-bed, 1-bath. And then
mm-hmm.
I saw an ad, which now in retrospect, it's just comical because the ad does not include a photo. It's just in the old days when
Right.
there was a book where it said like 3-bed, 1-bath, Violet's neighborhood in Madison, Wisconsin for 1,500.
Yeah.
And then you call a number, and I was like, dang, I thought I could get like 1,700 for this, and
Right.
my deal will not make any money now that I had a $200, positive cash flow. I thought.
Yep.
Anyways, turns out that building was like 100+ years old and should have been renovated like 50 years ago. And I was plenty safe, but I remember being so worried, like, wow, I really overpaid for this and screwed up on my first
Yeah.
deal. It's like my first whatever week doing this, and then yeah, it turns
Right.
out, a tip maybe before you get worried, go look at it.
Right.
So yeah,
Right.
I remember those days. And too, you had told me, when I asked about how you were structuring these deals, you had said, oh, just, like the Carlton sheet stuff. And,
Mm.
again, that's never came up. I've listened to actually all of those CDs, but,
Mm-hmm.
when I was going to baseball practice in high school, that's what I was listening to on my way. But if you want to,
That's
I'd
awesome.
be interested to hear you. How would you describe what's in that? What did you learn reading that or listening to those?
So I'm not very good at following stuff very well because I listened to some of them and I read some of them and I don't even know if I got through one of the whole CD or cassette or whatever it was, because I'm more of a doer. Like, okay, you give me the the overview or idea, and I got to go do it. I can't sit around and just listen to you talk all day. I got to go put it to action. So that's what I did. I just went out and started buying stuff, or trying to buy stuff,
Yeah. So
you know.
take action. That's Adam's
Yeah,
number one tip.
it is.
You
It
know.
is. Quite honestly, everybody, says, ask me that. It's like, how'd you get started? I just started. Everybody wants to read or make all these notes or whatever else. But yeah.
Yeah, I did a episode just me, like how to get started, and at one point I'm
Hmm.
like, how to get started is kind of a dumb question to me
Right.
because it's like you just start.
Right. You
If you
just
don't
do
have
it.
any money, yeah, then that makes things a lot harder. But then I
Yeah.
think starting to saving some money because you had told me this, so I'll just repeat it. Even if you can do a no money down deal, you still need some money. Like you
Yeah.
got closing costs or rehab, or what if
Right.
your tenant doesn't pay? You need to pay.
Right.
So
Right.
you really can't do real estate with no money unless you're going to try to do some sort of wholesaling business or something where you're just
Right.
flipping contracts.
And I've done a lot of no money down stuff, but yeah, like I said, you have to have, unless you can get somebody that's going to fund it all for you. But if you're a new guy, usually people aren't going to fund everything for you,
Yeah.
because you have no track record. So you still have to have rehab money, or like you said, if the person doesn't, if you rent it out, you still have to make the payment one way or the other. So you have to at least be able to float the place for a little while anyway.
And so what are some other big lessons you've learned over the last, 20+ years here? So I just get started, versus overeducating. What else comes to mind?
I mean, that's huge. Everybody wants to read. Nobody thinks they're ready. How's the saying go? 20% knowledge and 80% action, or however that goes. That's really the biggest thing. Um, I didn't know it all when I started, and I just kind of jumped in with both feet all the way up my eyes, and I just did it. And like I said, I stopped buying stuff in like 2007 or 2008 because I was working so much, and I had two little kids at home and a wife. It was hard to juggle everything, and I didn't start buying everything again. I started back up in like 15 or 16. So I kind of took a break for a little while, and then I've jumped quite a ways since then. But there's not only one way to do it. You don't have to quit your job and do this full time. You don't have to be a passive investor. You can kind of juggle. It just depends on what you want. Um, and I've kind of done a lot of different stuff. I had a bunch of equity and stuff, and I had some money saved, and actually I had a house that burnt down. I did pretty well on it. The insurance paid me pretty well for it. Um, so we took that money and rolled it into some other things, like in 15, 16. So I started scaling that way. And then I got to a point, I don't know, I think I had like 20 units or something. And that's hard to manage. 20 is like the max that you can manage, that you can self manage.
Part time, you're thinking?
Yeah, yeah. If you're like if you're trying to work a W two and
Yeah.
self manage, it gets pretty tough. If you're working 40 or 50 hours a week and then try to work on things or do showings or stuff like that, it's pretty tough. And you can't really afford to pay anybody unless you own them outright in cash. If you have a mortgage, it's pretty difficult to pay somebody and still be able to pay all your bills. So one of the best things that ever happened to me is the bank told me no. The bank said, "Yeah, we're not going to lend you any more money." They just get to a comfort level with you that like, yeah, you got enough. I was working my W-2 and I still, I had positive cash flow. I had some reserves. I didn't have $1 million sitting in the bank, and maybe that would have made them feel more comfortable. But whatever, if you have money sitting in the bank like that, it's just going there to die. But the bank said no, so I'm like, I don't want to stop buying stuff. So I found other ways to do it. And I found some owner finance opportunities. I really just started asking people. I found a guy that he's been a mentor to me over the years now for, I don't know, 6 or 7 years. He had 20 units that he sold me in one sitting. So I went from 20, I had 21 or 22 units by this time. And then he sold me 20 units in one sitting. So I went from 22 or 3 to 42 or 3, in a day. And I don't even remember. It was pretty much no money down. I'd give him some money for like administration fees or something. I don't remember what he wanted, but all the rehab money was on me. So I got into him for very little down, but I still had to rehab and, get everything up and going. Most of them were rented out, but they weren't all perfect. They needed work. So I still had to take care of them.
How did you meet that guy?
Oddly enough, through networking, just kind of people I knew. I had a flip I was doing. I called a guy, he's going to help me redo the floor. The hardwood floor needed some repairs or something. So I found a guy that could do flooring. So I'm like, hey, come do this. And he's like, hey, my father-in-law does this. He's like, he's a real estate investor. And I'm like, oh, that's awesome. And he told me who it was. And I'd heard of the guy before. He's like, you should have a talk with him. He's trying to sell his stuff, blah, blah, blah. So I called the guy up and we went and had coffee. And he's like, hey, I got 20 units I'll sell you. I'm like, that's awesome. So
Nice.
that's kind of how it worked, and I bought several $1 million worth of real estate from him since. So
That's great. Yeah. And then also like a mentor of sorts.
yeah, he's awesome. I go see him on the first every month and write him a check, and we sit there and chat about whatever for an hour or two, and it's kind of a paid mentorship, I guess.
Yeah.
So yeah, he's an elderly gentleman that's literally never had a job. He's been in real estate his whole life, so one form or another.
Nice. That's great.
Yeah.
Yeah. Just started after high school or college basically and kept going.
Yep. Exactly. He's a wealth of knowledge. Yeah.
Yeah. What else comes to mind in terms of just stuff, let's say for someone, maybe sort of things you've learned over the years? What else comes to mind?
I guess the biggest thing is like, everybody always says, what's your why or why are you doing it? Because I've got that question a lot, like when's enough? And, it's not only your why, but what do you want? My why was always for my kids or my family. But somebody's always going to ask you, when's enough, or why do you do that? Or what's it for, and you have to know that. And I've had a lot of people over the years, especially before I got to where I'm at now, they're like, oh, you got all these naysayers that everybody's got an idea or everybody's got their opinion about, rental properties, you'll go broke or, why do you want to do that or this or that or whatever else? Well, who cares what anybody else wants? You have to be able to turn that stuff off. That's a big one. You have to be able to not listen to people because everybody has an opinion about something. And it's mostly the people that don't know anything about it. How's that saying go? Don't take advice from somebody that you, that's not in a position that you want to be in,
Yeah.
So yeah.
Yeah, that's definitely how it works. So yeah, but then I'm sure you had some people that were maybe positive more so that, would say like, weren't more or less like naysayers or haters with it. Someone you could lean on that was like had a positive outlook of like on all this stuff. Then,
Like I said, the one older gentleman that I knew, he was positive. I gravitated towards him, and by this time, you can get online. Like I don't even know if Bigger Pockets was around, or I haven't been on Bigger Pockets a lot, but things like that. I would read stuff online. I just a lot of times I wouldn't. I just kept things to myself. I didn't tell people because I don't want to hear about it.
yeah,
You don't want to have to like have a conversation with somebody when they're just whatever. Um, so you have to pick and choose who you're telling. Like everybody says, tell everybody what you're doing, which does help. But you have to also know if you tell this person what you're doing, are you going to have to listen to about it? There's a lot of times my family, I didn't talk to them about it, because I'd have to hear about, 'cause my family wasn't into real estate. So,
yeah. I had a funny exchange over the holidays, yeah, over Easter, where everyone was talking about how complicated their taxes were this year because I think
uh,
one of them had sold a house and also moved to Texas from Wisconsin.
yeah,
And this is such a complicated return. And, my fiance is looking at me like, are you going to say anything, Drew? Because she knows like I'm doing like 50 tax returns a year and
right, right,
3, 4 different states. And, my tax return is, hundreds of pages. And so it's like, and
right,
I just, they didn't ask anything about what, my
right,
return. And I didn't want to be like a one upper. So I was like, oh, that sounds
right.
complicated.
Yeah,
So, this having
yeah,
sold that house, that's a big deal. And meanwhile, I had, bought 2 deals, sold, I think 3 or 4, whereas there's a lot of activity, but no, it's just,
yep, yep.
it was funny. I've had those kind of talks too. Fortunately, my parents are really, positive and just
That's
on
good.
everything where they're not, but also like realistic where they're not hyping you up. Like you can, just overdo it with, just, hyping up a kid maybe where they were never doing that. But if I told them I wanted to like buy a place, they were never like, oh, you're going to lose all your money. They were just kind of
Yeah,
like, okay, well, don't like, don't overdo it. Let's buy one, see how it goes. And, don't drop out of school. So,
right, right.
yeah. So no, they were always very positive. We're not, but not, not telling you can't do it or,
Yeah.
but also not hyping me up to like
Hmm.
unrealistic levels. So,
Yeah, yeah,
um,
yeah. Well, that's good. At least you had some positive support.
yeah, and then I know you at some point you hired staff. So like when did that all happen? I guess probably when you got to 40 units when you bought that, then you figured, okay, now I'm going to need some help.
Yeah, it was when I got to those 40 units. So I bought those 40, or I got to 40 units from that 20 from that guy, and like ironically enough, I bought like another 12 or 13 units like a month later, I think, or a month and a half later. I had another elderly gentleman. He had 12 or 13 units. It was like spread out between 4 buildings. So he owner financed 2 of them, and I went to the bank and got financing for the other 2. So we kind of split it and kind of use that for down payment and stuff for. So like I went from 23 or 22 units, whatever it was, to 50 some in like I don't know 2 or 3 months. Um,
Nice.
yeah, so so I needed help pretty quickly. And luckily, the flip I was doing, I kind of found a guy that was helping me on that. So he's like, "Hey, I see you're gonna need a lot of help. Maybe I should just come work for you full time or whatever." I'm like, that'd be awesome. Then I hired kind of a property manager, kind of a part time, kind of help just take up some of the slack. Because up to about 20 units, like I said, it's pretty tough to self manage, especially if you're working a job. But once you get over that, you have to have help. And I've known so many guys over the years that even if this is what they do full time, it's still difficult to juggle 50 units all by yourself. So that really takes a toll. So you have to be able to, I guess, swallow your pride or get rid of your ego, whatever you want to say, that you can't do it all on your own, and you need to hire people. That was about the time I hired people. I guess just 40 or 50 units, whatever it was. Um, but now I have a couple extra people, and I got twice that plus. So
Yeah, and then how did you think about the financial aspect of it? So because you're working a W-2, but then now you're going to be paying these people to work for you.
mhm.
What were you thinking at that point?
So I mean, my W-2 was always just kind of my properties were all self-sustaining. By this time, I didn't need to put any more in them. You you hear the culture, it's stupid to buy just a house or whatever else. Well, it can be. I mean, if you own 5 houses and somebody moves out, that's tough. But once you scale, it's a whole different thing. So my properties supported the people that I have working for me. I don't have to put any money from my W-2 into it anymore. So they all supported it. And it's just one of the things. It goes back to my thing about you have to know what you want and why. Because if your why is not, if you're just doing it just to be cool, or just to post on Instagram or whatever, you're not gonna last. It'll quit, and you'll get burnt out, whatever. But if you know where you want to go and you want to get there, you have to figure it out. That's why it's good for the bank to tell me no, because I figured out another way to get to where I wanted to go. So if you don't know where you want to go, or if you don't have that drive or ambition, you just, yeah, whatever. You go back to watching, Sunday morning or Saturday morning cartoons, or college football or whatever. So even though I wasn't making as much, and having to pay people, I was still getting towards the goal I wanted to be at. I was still paying for properties, and I was still, increasing my net worth and everything else. So
Yeah, and then in your goal, really, yeah, you are, I would assume, making more at your W-2 than what you're paying these people as well. So then
yeah,
it didn't make sense for you to be like, I'll step back and become the maintenance,
right,
renovation, leasing
right,
agent person now, and then
right,
yeah, and then also you wanted to keep your time, sounds like, available to look for and buy new deals versus get bogged
right,
down with the current ones.
right. And again, I mean, you have to know what you want. Like if you want to be the maintenance guy in your properties, then I guess the by all means. But if you want to grow your portfolio or your company or your investments, you have to have time to do that. And if you're bogged down by showing properties or maintenance or whatever, you'll never get to it. So yeah, you have to know what you want to do. That's important.
Yeah. Yeah, I know of a family that I had met when I was buying deals in Madison where
Hmm.
I think they bought like 50 buildings in the 80s, and
Nice.
they pretty much haven't bought any since. It's the mom, the dad, the son, and then like one employee, and they do it
Nice.
all.
Yeah.
Um, but it's interesting because that's a way different angle than what you did from there. Because then they could have, what if they could have bought 50 every decade? Would
Right.
have hired it out more. But I mean,
Right.
they got very focused on operations.
Yeah.
I met them because they were my neighbor, and they have like a folding table out and like passing out keys out of the house next to me.
Wow.
And then maybe let's just to bring it current day. Then I know you were doing some syndications at some point. Why
Hmm.
don't you walk through how did you make the jump from just you were investing just all your own money and doing these owner financing deals? Then how did you make the jump to syndicating deals?
So when I'm trying to think, in 2017, maybe, I was still kind of buying deals, and by this point, I got people that call me now. Like usually, even now, I usually get 2 or 3 calls at least a call a week, if not more, for people that are looking to sell places or whatever. So I don't even really hardly look, quite honestly. But in 2017, I think it was 2017. I'm like, I want to scale and I want to do some other stuff, but I'm like, there's got to be something else. So I think I found Bigger Pockets in or YouTube or something, and I found syndication. I kind of started looking into that. And I went to a couple conferences, and then I went to Best Ever in like 2018 or 19. I think it was 2019. I met a couple of people, and then that's when I found the coaching mentor that I ultimately joined up with. Think multifamily, which was a pretty good intro into syndication and apartment buying. Because it's kind of difficult if you don't like have an in or know somebody or anybody to partner with. It's kind of difficult to get into buying multimillion-dollar properties. If you don't know anybody.
Yeah, and I had not heard of Think until last year. So that Think it's like an educational group as well as like a networking mastermind kind of opportunity.
Yep. Yeah.
And so that's where you learned how syndication works, and then
Yeah.
also met potentially either like investors or partners there, I presume.
Yep. Exactly. All of the above. There's people in there that just kind of wanted to be a GP. There's people in there that just invested passively. There's others that just kind of helped out wherever they could. I think I joined in like April. They had some teaching modules, and whatnot. And I got through like 2 or 3 of those.
Yeah, I already know where this is going.
I hopped on an airplane and went down to Jacksonville, Florida, and started looking.
Yeah, nice. Okay, and then how have those been going?
So I found 3 deals in the summer of 2019, a couple months after I started. We put a portfolio together and raised for them and closed them out. The raise went fairly well, I guess. It was $18.5 million portfolio for my first deals. So we closed those out and put them on the market in 2022 as the market was just crazy. Sold them for, I don't know, like a 2x or something. And
Yeah, you exited all 5.
so those first 3 we did, and then in 2022 we bought 2 others. I bought a couple others with a couple other partners. So yeah, so they're moving along now. One of them's doing really well, and the other one's due to interest rates and insurance and everything. It's moving along, but could be better. So,
Yeah, and those are all in Jacksonville as well.
yes, they are. All of them are in Jacksonville.
Well, yeah, and then you started a debt fund.
Yes.
I remember you telling me about that, but I didn't hear all that. And that's, you do that on your own or with others, or?
No, I do it on my own. I started that last year. We've been doing some short term lending, fix and flip stuff, other such stuff, but it hasn't gotten too big yet, or big enough that I need to hire anybody. But between my 106 units that I have of my own and my syndications and everything else, and my W-2, it's been pretty busy. So
Yeah, you need to start a pref equity fund. That's the only thing you're not doing right now.
I know.
The debt fund, then what's like size is that roughly?
Well, it can go up to 100 million. It's an evergreen fund. We've had in and out a couple million. We haven't gotten too crazy with it yet, but yeah.
And then is that first lien positions on rehab deals?
Yes.
Then what are the rates like? What do you guys lend money out at?
We usually lend out around 14 with a couple points. When we're paying 8, and we've paid as high as 10. We had a pretty good size investor give us some money, so we paid as high as 10. So
okay, nice.
Yeah.
Great. Well, yeah. Well, sounds good, Adam. I think let's just leave it there. Yeah. Thanks for coming on.
Oh yeah, of course.
How do people get in touch with you if they want to reach out?
They can get me email, Adam at Sondgeroth Capital. Maybe we could spell that for them somewhere.
Yeah, it'll be in the title or show
awesome.
notes. Yeah,
Awesome.
Description
here. And my website, sondgerothcapital.com, and I'm on LinkedIn as well. So
perfect. And put that all in the description. All right. Thanks, Adam.
Awesome.
Appreciate it.
Awesome. Thank you.
If you learned something from today's show, leave a review and hit that subscribe button wherever you enjoy your podcasts. Dive deeper into real estate investing on Brenneman Capital's website, brenneman.com, where we have numerous free resources and information that can help both active and passive real estate investors. Accredited investors can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Brenneman and guests as of the date of recording and do not purport to reflect the views or opinions of Brenneman Capital LLC and its subsidiaries. Views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities. The speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.